Time now for business, and we say hello to Kate Moody.
Bonsoir.
The markets, we saw a huge tanking on Monday over coronavirus fears. How's it going today?
Well, the losses are a bit less steep, but they're still adding up, Francois. Monday was the worst session for global stocks in over 2 years. On Wall Street, the Dow Jones has continued its drop after losing 1,000 points on Monday. It's down a further 380 this hour. The yield on 10-year U.S. Treasury bonds, meanwhile, trading at a record low near 1.3% as more investors turn to those so-called safe haven assets. The major European indices declined as well. We saw stocks in Milan weighed down as Italy emerges as the epicenter of the European cases. The FTSE 100, DAX and CAC 40 each down nearly 2 percentage points there. Analysts say that companies and investors are beginning to take stock of the medium to long-term impact of the outbreak.
How investors are reacting to the likelihood that economic activity around the world is going to be dampened by the coronavirus outbreak. So it is true that markets are typically guided by greed and fear. I think that there is some fear creeping into the markets now, but I don't know that that's necessarily irrational.
Well, those warnings have shone a spotlight on how much companies depend on international supply chains. The French finance minister, Bruno Le Maire, said the outbreak could be a game changer in the way the now globalized economy does business.
The outbreak underlines the imperative need to relocate a certain number of activities and to be more independent in a certain number of production chains. The best example of this is the health sector and medicines. We can no longer continue to rely 80 to 86% on active principles for medicines that are produced in China. That would be irresponsible and unreasonable.
Well, few sectors have remained untouched by the outbreak. Here in France, wine producers say they're already seeing a drop in exports to a key market. Claire Rush reports.
This 64-hectare winery in the south of France produces 400,000 bottles of wine per year, 10% of which are exported to China. But this year, not a single bottle has been shipped there. The coronavirus exacting its toll.
This is our 2019 rosé. It was supposed to be exported, but now they won't be heading to China. All orders have been cancelled. We don't think we'll be able to export anything there for 2 to 3 months, especially as we can't get in touch with our importer there.
The whole industry has taken a hit. China is the 4th largest market for French wine. 10% of France's total wine production is exported there, accounting for 604 million euros in 2018. This winemaker estimates his losses have already reached 800,000 euros.
In terms of sales, it's very concerning. We're now obligated to redefine our commercial strategy, which is a major problem. And there will also be repercussions regarding jobs.
The future of his 15 employees remains unclear. On top of the coronavirus, France's wine sector had already been struggling with the fallout from Brexit and U.S. tariffs, casting economic doubts over this year's vintage.
Well, moving on to some of the day's other business news now. EU ministers have formally agreed on a mandate for their negotiating team as trade talks with the UK are due to kick off next week. The guidelines indicate the EU will insist that British rules and standards remain similar to Europe's in order to maintain access to the single market post-Brexit. The British government immediately rejected that idea. Its team is meeting to establish their own mandate, which will be published on Thursday. The EU's top negotiator, Michel Barnier, has warned that he will not conclude an agreement at any cost, saying the talks were likely to be difficult. Well, Donald Trump's visit to India was seen as a chance to improve the country's economic ties after trade tensions flared in recent years. There's been no big news of a trade breakthrough, although some deals did get announced on the trip. Cole Stangler has more.
Behind the pageantry, getting down to business. On day 2 of Donald Trump's state visit to India, the U.S. president announced the sale of defense equipment worth more than $3 billion. That includes 24 helicopters from Lockheed Martin and a further 6 Apache helicopters made by Boeing. Meanwhile, with the thorny issue of trade in the spotlight, Trump sounded an optimistic note.
Prime Minister Modi is forging bilateral economic relationships that is fair and reciprocal. Our teams have made tremendous progress on a comprehensive trade agreement, and I'm optimistic we can reach a deal.
At the same time, Trump is poised to leave India without a trade deal, running up against New Delhi's own brand of protectionism. Over the last couple of years, the U.S. has hiked tariffs on 14% of Indian imports, while Prime Minister Narendra Modi has responded with new duties on about 6% of U.S. imports. And while talks have continued, key issues remain unresolved, including restrictions on American dairy products, U.S. medical devices, and e-commerce. Trump has aimed to cut Washington's trade deficit with India, though it's still standing at some $21 billion.
That's all the business news for now, Francois.
All right, many thanks for that, Kate Moody. We'll have more business news for you later. It's time.